All right. Thank you very much for joining us, Martin. We appreciate it. Thank you for your patience while we had some technical difficulties. But it is amazing to have you on the show. As you can see, your team sent us both your books, specifically
Front and center, right in the middle.
The Index Ventures Founder's Guide to Building a Global Company from Europe, which is what we want to talk to you about. We spent the last week reading it and going deep. And so the first question we want to ask is, why this book? Why now?
Yeah, well, first of all, maybe, talking a little bit about the context of the book. So, Index Press, what is it? Who is it for? So it's very much for entrepreneurs. And in this particular book's case, it's very much for entrepreneurs who are thinking about going global and going in the US in particular, or already in the process of going there, or just landed there and just want to make sure they don't make mistakes. All the resources in Index Press follow the same playbook, which is that we mix some qualitative elements. So we've in this case we've interviewed more than 40 top CEOs and operators. Daniel Ek from Spotify, and Ilkka Paninen from Supercell, and Nick from Revolut, and so on. And we always mix it with quantitative elements. So in this case, we analyzed 500 startups and looked at their expansion to the US and when they would do that. And the goal with that is very much to share the learnings from this previous generation of companies that have most of them successfully enter the US market and become truly global, and making sure that all the learnings can be shared with the next generation so that they can go faster and go bigger. And outside of the practicalities that comes with this book, there's also just the message of we found that European startups are becoming global and have a transatlantic presence earlier in the journey. And we want to keep on encouraging that and making sure more and more entrepreneurs have the tools to do it and increase their level of ambition.
Yeah, absolutely. And I think the key stat from the book is that 64% of startups are now expanding at seed or pre-seed stage to the US versus 33% 5 years ago. That's like a massive jump. What do you think? What's driving that? And I know you go into it into the book, but give us your overview of why that's happening.
I think the piece about having the knowledge and having role models, I think is a really important one. I think there are now quite a few companies that have done it successfully, and that show to people that they can do it. It's getting easier to set up a US subsidiary. It's getting easier, obviously, to hire people remotely. It's getting easier to sell to the US market as well, and from a distance. So I think the infrastructure and the mindset have changed and have made that possible. Hopefully, we hope it continues and it gets even higher. I think there is a unique opportunity in this moment for European companies to build in Europe. There is a massive cost and quality advantage at the moment, and to sell in the US as a winning formula.
And we hear that a lot from founders that we speak to. It's build in Europe, sell to the US. The US market is it's the biggest market in the world. You've got to succeed there.
The software market in the US is twice the size of actually slightly more than twice the size of the European market. But not only that, the velocity and the ease of buying from US buyer is a lot faster. So if you compound the two things, where it's a lot larger, plus the buyers are a lot more willing to take risk and buy things because they see technology and they see new tools as a potential competitive edge versus something that is risky and may challenge or challenge the operations, for example. Those two things together mean you can get traction, more traction, much faster with typically with the US customers, both on the consumer side, but especially on the enterprise side.
And that sort of seems to mirror what we hear a lot of about fundraising as well. That raising in Europe versus raising in the US, it can be much, much quicker, and decisions are made much quicker. one of the things I want to talk about is.
But I think what's interesting in the sorry to interrupt, but what's interesting in the survey when we ask people the reason why they expand to the US, the first reason by far is customer. It's revenue. It's more than 3/4 of them say that customer attraction is the reason why they expand to the US, and capital comes second, but it's a distant second. And so I think that's also quite a takeaway. You can raise significant amount of capital in Europe, both with European investors and US-based investors who have a presence in Europe. And yes, it is true that the speed of processes can be slightly faster, in the US, but typically it's not the main reason why folks would expand to the US market.
Yeah, that makes sense. And I remember reading that the fifth largest reason was access to capital markets, that it's exiting and sort of going public and getting that kind of late stage capital is the fifth reason, but it's grown a lot. I'm curious, do you think that reason is going to grow significantly? Because I know that from the UK, we see companies like Monzo or Oak North Bank, which are predominantly almost entirely UK or European focused, that are IPO ready, and now they're looking to expand in the US. And I always think, a lot of these companies have spoken about gearing up for a US IPO, and it almost feels like the US expansion is part of that strategy to IPOing in the US. That if you want to IPO in the US, you have to have a brand and traction in the US to invest those types of investors. Do you see that trend continuing? Do you think for late stage companies that expanding to the US is a great way of being able to IPO there a year or two down the line?
I don't think that's necessary. There are plenty of counterexamples. You have, a lot of Chinese companies that are listed in the US that don't have a US presence. You have, if you look at Nubank, for example, in the fintech, you mentioned Monzo. You can compare with Nubank, which is a Brazil and, Mexico only business that is listed in the US and has done, pretty well, actually. And so I don't think you have to have a US presence. It helps to get included in some indexes. So there are some benefits of having a US presence and a significant US presence when you're listed in the US, but it's not a prerequisite. I think the listing side for me is, companies will want options, and they will look for what's best for them. And if they think they can get better coverage, more liquidity, more depth, and as a result, better pricing and better price discovery in the US, either on the NASDAQ or the New York Stock Exchange, then that's where they will go. And I think, if I were a European exchange or a regulator or government that wants to promote their exchange, you have to, it's not good enough. You can't say, companies have to list locally. I don't think that's realistic. You have to think, it's a global market, it's a global competition, and you have to make sure and think, okay, what are all the reasons why we are not as competitive as potentially some of the US markets, and what can we do to change that?
I think what we're hearing, is that what it sounds like, if you look at the whole funnel from pre-seed and seed all the way to IPO, a lot of the conversations that we've been having are very, very cultural focused, like risk appetite, how quick we can move. Do we have, even speaking to Adil, one of our earlier guests today, do we have the SF vibes here in Europe? But it sounds like you guys have taken a much more systematic, factual approach to this process. What do you have to say to the people that are saying, we just need to increase the vibes here in Europe. We need to push this cultural change. Do you think that holds weight, or?
Look, I think you can build fantastic businesses from anywhere in the world, pretty much, and certainly, in Europe and certainly in London. You mentioned Monzo, which is a great business. We've obviously been involved with Revolut from the early days. That's a fantastic business. That's a better business than any business in the same category, pretty much anywhere in the world, and certainly in the US. So you have those counterfactual examples that mean that they're just the illustration that you can. I think our approach is more to say, and Revolut is a good example of that you shouldn't tie yourself to one territory from the get-go and stay too long and locked up in that one place. And I think there is a bit of what I call the mid-sized country trap in Europe, where if you're in the UK or if you're in France or Germany or Spain or Italy, you feel like you have a large enough domestic market to get started and get some traction. And so you start there and you build for that market and you build a team for that market and so on. And then, you wait until you feel like you're ready. You have, 5, 10 million in revenue, 50 employees and so on. And it's okay, now I'm going to start sequentially opening a new market. And then the next one will be Germany or will be UK or whatever. And that's almost like starting a new company, because you have to start hiring local people who speak the language, who understand the market. You have to localize the business. And then you do those, so it's going to take you another, 2 or 3 or 4 years. And then by the time you've done 2 markets, it's been you've been, 8 to 10 years in. It's okay, now I'm going to go to the US. I'm going to go to the third market. And again, you have to restart. But by the time it's too late, there is a local competitor, certainly, or multiple ones. And every new market gets harder and harder. And every time, so the more you grow, the harder it becomes. And you compare that with folks like Revolut, that started with a global approach from day one. That's what we, call born global versus become global. And they architected their team, their product, their go-to-market as a global entity. Started with the UK and continental Europe at first, but then also expanding rapidly to other markets. Which means that every new country, what they have to do is, obviously respect the local regulation and offer the product in a way that is, that works with that regulation. But they also took advantage of the European financial passport system to expand very rapidly, across Europe. And so every new product, every new geo is not like starting a new company. It's just adding, like turning on a button almost. I mean, it's not as simple as that, but that's in a sense, that's what it is, which means that they've been able to kind of go very broad and then invest in the markets where they have the best traction and to build a truly global business. And then it means the bigger they get, the easier it gets, because they can reinvest very easily the profits they make in some of the mature markets into some of the new markets. And then that flywheel kind of keeps accelerating and keep going. And then they have a very deep market, which means it's easier to raise capital because, people say, oh, there's still a long way to go. And so, you see how that gets easier versus if you go sequentially, things get harder. And I think that's the mistake that some, European founders tend to make at times. And I think that there are some verticals where it makes sense, but in general, I think, think global, born global is a superior model.
Yeah, absolutely. And the best thing about the book is how many of those examples that you go deep into throughout it. Every example, every archetype. There's a great example from one of the leading European founders. One of the things we also wanted to talk about was that Index Ventures is probably one of the, if not the only European VC to successfully expand first into San Francisco and then into New York, which I know you had a big role in. Why do you think Index as a VC was able to so successfully expand into the US when so many others haven't been able to?
Well, I think the first thing is, again, as to what we just discussed, is cultural is it's usually the biggest factor. The founders of Index were educated in the US, had worked in the US on the West Coast, and actually the ethos of Index was very much that great entrepreneurs could come from anywhere, and that the Valley-based VCs were kind of missing an incredible opportunity by being so focused on Sand Hill Road and expecting people to come and show up at their door. Their ethos was, starting in Europe, there's great talent, there are great entrepreneurs, there's great infrastructure, and so there are going to be amazing opportunities. And so we started in Europe and started making deals, anywhere in Europe and meeting entrepreneurs anywhere. And our first successful deals actually were not in in those mid-sized countries. They were in the Nordics and then in the Baltics. So, Skype and King and MySQL, they all came from the same region, which didn't have this mid-sized country trap because their domestic markets were so small that they had to be global from day one. And that was a huge advantage. And so that's how we got started. That's how we, really found our niche and had a difference. But we never limited ourselves to Europe. Even when we didn't have a presence in the US, we were still doing deals in the US, both on the West Coast and in New York. And, even before opening an office in New York, you look at our investments there. They include Datadog, Squarespace, Etsy, Cockroach, JustWorks. I mean, so really great list of amazing companies without having a local presence, because we always felt that great entrepreneurs could come from anywhere. And then the second aspect is that when we decided to open an office was typically when we already had kind of a critical mass of investments of network on the ground. And we did it in a very deliberate way. So we would always send 2 senior people not one but two, to really have a critical mass and not have a lone wolf going on their own. Sometimes bringing some other team members with them, in the early days, to hit the ground running very quickly. Have enough people who are very familiar with the index culture, the index history, index way of doing business, and also keeping a very tight connection with the European team, and so investing, and also investing significantly. So if I take New York, for example, it was 4 of us when we started, and it's a big investment. Both Shardul, my partner, and I, kind of co-leading the office. We've been committing to stay there for at least 5 years, and probably more. It's only been 3 years in, and we have no intention of moving. So it is a serious commitment. We're kind of burning the ships in some way, and really going deep to make sure that we're successful, and do it in this very deliberate way. Which is also, by the way, what we recommend to companies. There's this magnet archetype, which is when you get pulled to the US market by your customers. So enterprise sales or enterprise software in general is a good example of that. And we recommend that they do the same thing, that they send at least one co-founder with a small team around them of people who have been, deep in the company, understand the market, understand the culture, and keep that bridge, and make this significant investment to make sure that there is a core of that culture and that DNA that moves with them, and then hire not senior people to whom you outsource, but junior people who you can train and you can grow inside that company in the way that you want.
Yeah, and it was one of the things that stood out to me in the full word that you wrote. Is a line where you said it requires commitment, like above all else. And I think that sort of like burning the ships really resonates. That you've got to go over there, you've got to commit to it. But I'm conscious that we're out of time. But thank you so much for joining us. We really appreciate having you on. We love reading your book. And yeah, look, we love Index Ventures. Thank you so much for coming on, and
we appreciate it. Congrats on the book.
Thanks for reading. Thanks for having us. And your support means a lot. We take a lot of time and pride and effort to put those books together. We think it's really important that we share the learnings from we've been doing this job for 30 years, and we've been working with a lot of great companies. And so being able to share these learnings with both our portfolio companies and also companies that are not in our portfolio, I think is a super important way to make sure that European companies get even bigger, even faster. And again, I think there's an amazing opportunity, and it's also our way to encourage people to think big and act big and move fast, because now is the time.
Absolutely.
Love it. Thank you so much, Martin.
Thanks.
Bye-bye.
Good to see you.